Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. It's Friday here at Options in Play, and you know what that means. It's time for earnings on the radar for the upcoming week. I like this little tradition we got going here, and I see no reason to stop it. It's a really great opportunity to get everybody looking forward to what's coming up, and also kind of get into like a good mindset, mentally prepared for these earnings that are going to be due out in the next like 5 or 6 days or so. So where we stand now is earnings season. The meat potatoes is more or less past. So most of the big tech names, most of the big healthcare names, most of the big energy and banks all have passed, which means that we're getting into the retail portion of earnings. And for the past few quarters, these have been some of the most consistently volatile movers. Up or down, these things have been really, really wild. And I really see no reason why they shouldn't continue that way, especially this quarter. So this quarter and next are really like the two most pivotal quarters for retailers, right? So this quarter, you're going to get the guidance for the holiday season, and then next quarter, you're going to get the actual sales from the holiday season. So, expect a lot of talk as we get into like this retail heavy portion of just holiday sales, Black Friday sales. You're going to see a lot of big moves off of that. So Monday morning, as is normally the case, not a whole lot doing. Really, companies don't tend to schedule, or a lot of companies don't really tend to schedule their earnings before Monday, before Monday before the bell. So kind of quiet on that front. I will say though that there are some bios presenting at different conferences over the weekend. So you can expect maybe some action in a few biotech names. So up here I have Nectar. They're going to be presenting a pretty critical update. You can see right here back in June at the ASCO conference when they presented the update on their drug is when it cratered. So this is the same drug, same trial. Expect some action in that one. TSRO presenting some data as well. Same conference. This is a different drug, but same conference. Also, been kind of a roller coaster, and probably needs this one to really shine, to start turning around like this long trend that it's been in. Amarin, just about the complete opposite. Going into the weekend, this is when they're going to be presenting the full data set from this readout here, this phase 3 readout. Just looking at the options going into next week, the next week's trial is priced in at about 7.5, right, for a $21 stock. So that's about a 35% move. Even on top of it being up, 1,000% since it reported that data. So expectations are very, very, very high, and they're still expecting a really big move off of this. So that's definitely one. Come Monday, you're probably going to see up quite a bit or down quite a bit. All right. After the close Monday, still relatively quiet, but you will have a couple Chinese tech names. So Huya and YY. And if you notice, both are still in really aggressive downtrends. Just really just lower lows, lower highs, super consistent, getting pushed lower by moving averages. Same thing with YY. Honestly, it's been really difficult to get paid on these types of setups. Chinese names have just been an absolute void for the most part for me. You'll get a little bit of a bounce, but they've really just been kind of like steadily grinding lower, and earnings haven't really been that big of a catalyst for most of them. So YY Huya, I'll keep an eye on them, but not at this point. Not really thinking of playing them. Tuesday morning, Home Depot is the big boy. Also, Advanced Auto Parts, but Home Depot really, man. Next to Walmart, which I'll talk about a little bit later, one of the biggest names. Well, it's one of the biggest retailers, but also one of the biggest names of the week. So this quarter in Home Depot, almost kind of like last quarter, a lot more caution because of the really ugly numbers we've seen in anything real estate related. Suppliers to real estate industry, home sales, just all sorts of really miserable action in anything real estate related. Clearly, Home Depot has big exposure to the real estate sector. Up until this point, it's been immune to whatever has been plaguing those other names. I mean, the numbers have really been incredible. I mean, for a company its size, the numbers have been fantastic. Last quarter was a really strong report. Um, I mean, the stock got washed out. There was a couple downgrades that really contributed to like this big washout down here. Where you can see a perfect double bottom off 170. It's back up. Uh, this is going to be the first time Home Depot is going to be reporting earnings below its 200-day though in about 2 years. 2016 was the last time. So with options pricing in about 7.5 points, this could be a pretty good volatility candidate because obviously it's lost a lot off its high. People don't really know what to expect. The stock's not cheap. It's had a massive, when I say massive, I mean really massive multi-year move. With anything real estate starting to show signs of weakness. So, this one seems like it's just primed for a big swing. Which direction? I'm not really sure. That's why I'm thinking a volatility play could be something worth watching. Right now, like the trade open is a call spread, but we can adjust that ahead of earnings, right? After the close Tuesday, Switch and Tilray. So Switch is a name we've traded in the past. We've traded this a few times, actually. It's been a pretty consistent mover on earnings, which I love. Actually, the setup was pretty consistent as well. I mean, it would rally into earnings, get miss, dump, rally, miss, dump, rally into earnings, miss, dump, and then now it bounced, but it hasn't had the same magnitude of rallies it has the past couple quarters. So the setup is, the same setup still kind of stands, right? It's in the really aggressive downtrend. Each time it's missed, it's basically put in a lower low. So, I do think that the same strategy probably still stands here as a strangle, but the risk to reward might be more skewed to the upside now. With the stock down around 9, it seems like maybe like the downside's more limited versus, if they can actually figure out how to turn it around. I mean, there could be a pretty big move higher. It's still heavily shorted also. Priced in at about $1.75. Last quarter it moved almost 4. So options aren't too bad, but it seems like more like the risk reward's more skewed to the upside on this one. Tilray, wild card. I really have no idea what to expect, to be honest. Earnings and revenues alone probably don't justify where it's at the time. Even off its high, I mean, at 113 is still a $12 billion company. So, plus that's not really why people are involved anyway. I mean, maybe down the line, yes, we're thinking about earnings and revenues, but this is more of like a concept stock at this point. The weekly straddle is priced in about 24 points, which it's actually not crazy for this name. I mean, considering it can move 20 to 30 a day. I mean, it was up 35, down 20, so 24 points. I mean, it's not that's not totally unreasonable, but I don't know. I just feel like that it needs some major announcement outside of earnings and revenues to see a massive move. Because I don't think those are going to move the needle much. So overall, it's kind of a toss-up for me. I really don't have a clear bias. I might be on the sidelines, maybe play a sympathy trade on it with like CGC or some other marijuana play. All right, Wednesday morning, Macy's and Goose. The Goose is on the loose, right? Goose was tentatively scheduled for this past week, but earnings were pushed up until this coming week. Last week in the video, I talked about how I thought a volatility strategy was an interesting bet, and really like that strategy still stands. What I like about Goose is this really well defined range here. You can see it's been since that big pop on earnings a couple quarters ago. It's been a really nice channel like trend. Options are more expensive now, so about 8.5 points. But technically it's been range bound for about 5 months now, so there should be a pretty good pent up move here. I guess what I'm watching is if it's bad, we'd have to break below 50 with some volume, and then it has like a really well defined gap down here, right? But even then, I mean that's about a 10. Well, depending on where it goes out, I mean it's about a 12 to 15 point move. And if it's good, then it breaks out, and it's still never gone back to retest the high, which is up uh, 68.75. So I mean, right there, that's about a $9 to $10 move. So at 8.5, options are expensive, but there is visibility for a pretty big move here. I think a way to manage the risk with those options would it'd have to be some sort of spread strategy or fly, just because those options are a little bit more expensive and might remove a lot of the move, but there probably should still be a little bit left. So a strategy that's maybe capitalizes on like a volatility, like a strangle, but with spreads instead. And Macy's. So this is gonna be one of the critical reports of the week. Uh, Not in the sense that Macy's is a huge company, but in the sense that it's the first brick and mortar clothing retailer, and also it's going to have an impact on a lot of other names. I'll talk about that in a second, but Macy's got hit pretty hard last quarter after a decent report, and at this point it's more or less back to where it was, right? It bounced in the aftermath of that report back to like 37, 38 area, so it's kind of in that same ballpark. It's still in a good position to head higher if the numbers are good, but I just can't shake the feeling that this number is really going to have to be an absolute blowout, because last quarter was decent and it sold off, and in this environment it just seems that people are really hesitant to take things to 52-week highs. So I just feel like it's going to have to be an absolute blowout to really head higher. Um, they're looking for about a three and a quarter, three and three quarters, so 375. That's the price to move. And I mean that alone is only about half of what it moved in August, so it's not terrible. What I like to do with Macy's though, because of it's normally one of the first retailers to report, the brick and mortar ones, is sympathy trade on it. So what I mean by that is Kohl's a move. So Kohl's a move off of this. Nordstrom, Target, Dillard's, all these stocks are going to react to what Macy's says. They're pretty correlated. And what I like to do is look at the ones that don't report next week, because the options on those should be cheaper. So, just looking ahead, Kohl's and Target, they report the following week. So those options should be trading slightly cheaper, and most likely will have a pretty good move based off of what Macy's says. So if you see, going back to August, you could see that Kohl's on when Macy's reported had a similar drop, right? So that's what I'm thinking. Kohl's might be a pretty good play. Um, it's options are cheaper. It'll probably move. Maybe not the same magnitude, but it definitely should move pretty sharply depending on what Macy's says. Also, later in the week, you're gonna have Walmart. You're gonna have Nordstrom, J.C. Penney. So it just seems that sympathy trades are set up well for weeks like next week, when you have like a kind of a grouping of like companies that are have a pretty I don't want to say like people won't say that Macy's and Nordstrom are exactly the same, but they're pretty similar, right? So that's what I'm thinking. Kohl's could be the bet for the week. After the close Wednesday, Cisco big tech report, and a couple Chinese tech names also, NetEase and VIP Shop. Same story with these Chinese names. Trends just are brutal, just aggressive lower trends, and same story. It's been really tough to get rewarded, so I'm most likely avoiding these until the patterns change. Cisco is interesting though. So played this one last quarter, and it finally broke out of this year-long resistance around 46. Had a nice move up to 50, right? And after rolling over, had a really sharp snapback. I mean, it's pulling back today. Everything's under pressure today, but it really showed its relative strength over the last week. At one point, it came within about $1 of its 52-week high. So a really, really impressive snapback for a name like this. last quarter's last quarter saw accelerating revenue momentum, and that probably bodes well for this quarter. But I guess really when you look at it, the biggest issue for this is probably overall risk environment. Most big cap tech names just aren't breaking out to the 52-week highs. So, I question whether even if Cisco like smokes their estimates, is it going to necessarily be up a lot, right? Uh, Weekly straddle is priced in about two and a quarter. Um, I'm thinking, you gotta be bullish biased because of last quarter, but maybe like a calendar spread or longer dated position could help kind of like minimize near term risk. Maybe minimize like the chance that this quarter is a little bit more of like a non-event or a more muted move. But then like as things firm up and the market firms up, this is a name that works its way higher. Hopefully, puts in a new high. Especially when it showed how strong and resilient it was just this past week when it really like snapped back sharply. So that's what I'm thinking with Cisco. For the open Thursday, biggest name of the week by far, Walmart. And this stock has just been on an absolutely incredible run. It finally closed the gap from the February disaster. Just really steady. It seems like it's almost like people are kind of treating it as like a defensive stock in a certain regard. I mean, just look at what it's done since while everything was rolling over, Walmart's been just rallying. Um, the problem here is that expectations might be a little high, right? Uh, Walmart had an analyst day on the 12th, and it's had a pretty big run since then. Um, so some of the numbers are already out. Maybe some of the numbers are already in the stock, right? Some of the good numbers. Last quarter was pretty strong, popped about 10 points, and um, the last quarter plus the analyst day plus this move, I'm just thinking expectations might be a little ahead of themselves. The options are only priced in at about 4.5, which I know. I mean, it sounds crazy, only 4.5, but it moved about 10 last quarter. Um, but even then, I mean, even at 4.5, I'm just wondering if this could be a more mixed or muted reaction just because of the magnitude of the move it's had over like the last month. I guess what you could watch, maybe if Macy's has a blowout and Walmart trades up like a few points, or if Macy's misses and gets crushed and Walmart trades down a few points, then maybe it gets interesting. If it has a really sharp reaction right ahead of its earnings, then maybe a trade. But I'm thinking it might be one to leave alone just because expectations might be a little bit too high here. After the close Thursday, a couple big tech reports. So Nvidia, big one. AMAT, another big one, and then you have a couple other retailers, so Nordstrom and Williams Sonoma. So first with AMAT, this one's lumped in that semi-equipment group. These names have been pretty consistent. What I mean by that is the quarters have been okay. The guidance has mostly been weak. Reactions in these stocks have been so like this is like the LAM and the ASML and the CLAC and so on and so forth. Reactions have been muted to maybe slightly more bearish. Options are priced in at about two and a quarter for AMAT. Uh, the current call spread is at 38 for next week. Not call spread. The current call is a 38 call for next week. Uh, Wait and see what to do with it. It's holding a higher level. Maybe you could see a push towards 36 before numbers, and then that would put that contract in play. So we'll see how like the market shapes up. I mean, a lot happens between now and next Thursday. We'll see what the options like the positioning is on it, and then we'll kind of take it from there. Nvidia, this is gonna be a big one. So first off, options are priced in about 21 points, give or take, with Nvidia. Um, here's the issue, right? So Nvidia is below all near-term moving averages, and it's hanging around its 200 level. So this is by far the weakest price action you've had on Nvidia, I mean, basically since it was like a $20 stock. I mean, I'm really not exaggerating. So you can see what's happened to this over the last couple months. So, to say that this quarter is going to be critical, I really don't think is an understatement. I mean, it needs just a blowout or a really strong report to turn momentum around here. Uh, Semis have really been a mixed bag, and there's been some okay numbers, but I'd say every like 3 out of every 4 have been weaker. And I mean, Nvidia and AMD aren't perfectly correlated, but AMD was a pretty bad quarter, and I think that's making people more cautious on Nvidia because AMD warned about the crypto slowdown, which definitely is going to impact Nvidia. Uh, it's another one where a volatility strategy could be the way to go. Stocks at a major inflection point and a serious breakdown from here. Well, first off, I mean, the price in about 21 points, but it's almost 30 just to retest the low from a couple weeks ago. Or if numbers are good, right, and it starts to work its way back up. I mean, it still hasn't backtested the 200-day, and that's about 40 points higher. I mean, I don't think you'd see that in one day, but over the course of a couple weeks, if Nvidia, really has like a fantastic report, maybe it gets up to 225 initially, and then starts to build for a backtest at the 200-day. I don't think that's out of the cards. So, volatility strategy, maybe stagger the expirations, longer dated on the call side, shorter dated on the put side, something in that camp. Nordstrom. I'm thinking it's going to be tough to capitalize on this one at this point Macy's and Walmart will have reported. But that's why again like I'm thinking like Kohl's could be a good play for next week just because you'll get all of these reports with options that are cheaper. So but by the time Nordstrom reports, you already have Macy's and Walmart out. So, I mean, it seems like the way it gets rewarded is if it's materially different than those two. But I still like the idea of a sympathy trade on Kohl's or even Target just because of the amount of brick and mortar names reported next week. Williams-Sonoma. So we're in this one last quarter. Pretty nice move. Popped, squeezed up above 73 or 72, 73. It rolled over really sharply, closed the gap, has bounced. It's still about 10% or greater than 10% off that August high. So there could be some potential here. I mean, last 2 quarters were super, super solid. Expectations probably aren't as high because Restoration Hardware wasn't anything special. So maybe expectations a little bit more muted. I think there could be some room for upside surprise again. Options are priced in about 425, so 4.25. But it's about 9 to 10 to retest the August high from where it's at 63 to 64. About 9, we'll say like 8 to 10 to retest the high from a couple months ago. It's still heavily shorted. Thinking it could be a pretty good speculative long. Williams-Sonoma. And all right, Friday morning. Not much doing really. There's not really any like major reports. So that's why like Thursday is going to be the emphasis. So Thursday is going to be it's a big night of our names and because there aren't a lot of big reports on Friday, I mean it's going to really dictate trading. So I mean expect Friday. After Nvidia and AMAT, you're expecting semis to be in play. You're expecting retail to be in play after Nordstrom and Williams-Sonoma. Plus, next Friday is monthly OPEX, November main expiration. So really shaping up to be a busy session. You could see some pretty wild moves in those stocks and the semis and retail on an OPEX day, which could really lead to some big swings. All right, guys. It's a lot to take in, but it's worth spending the time and going over this because it gets you in the proper mindset. Lets you start planning ahead to all of these reports, all of this action coming up. So rest up, enjoy the weekend, and get excited because there's still a ton going on. And personally, I love retail earnings. Just because they're so wild. So I'm really looking forward to like these next couple of weeks because I think there's going to be some great opportunity. So as always, love to hear from you. Reach out, questions, comments. Have a fantastic night, and I'll talk to you guys on Monday.